Oil prices steady in the wake of Monday's mystery $5 slide. Traders say the fall does not reflect a fundamentally bearish shift in the outlook for prices or supply. The decline is being put down to computer trading and rumors of an imminent release of stocks from the U.S. Strategic Petroleum Reserve. Or is it just a fat finger error? Let's hear from Simon Wardell, Senior Oil Analyst, IHS Global Insight. Hi there, Simon. Was the market overbought and therefore susceptible to a downward slide?
It's an unusual one. You mentioned there the fat finger explanation, the idea that someone made an incorrect trade, too much volume, or there was a computer algorithm that started selling. It doesn't actually look like that because the fall took place over more of an extended period than you would expect from just one trade. But then you don't often see a fall of that magnitude on the basis of fairly limited, I suppose, downside news. So it does look like it might just be one of those odd occurrences where we sort of had a number of different factors coming together to push prices down. The key one at the moment looks like the option expiration of contracts on the Monday. That seems to be one that, in tandem with those other rumors we heard, may have had an impact.
What about these rumors of a release of U.S. strategic reserves? What prompted those, and is there anything behind them?
Well, I don't know. I mean, we've actually heard these rumors for several weeks now. We are in the run-up to an election, of course. Prices keep moving up. We have had a little bit of speculation this past week about something perhaps happening in Iran, so perhaps connected to that, there was a little bit more talk about a release of oil from the SPR. Frankly, it's not really needed. Inventories are pretty high at the moment, and there is enough supply. Of course, if we did have a major disruption, it might be a different story. But I think to release just to try and push prices down is probably going to be a little bit short-sighted, and I'm not sure that the U.S. government is going to take that course of action. But those rumors are floating out there, and certainly they do occasionally have an effect. I wouldn't have thought $5 worth, though.
So as far as you're concerned, though, no fundamentally bearish shift going on. Crude prices supported by the anti-Western tensions in the Middle East.
Oh yeah, I mean there's a balance at the moment. The economic outlook doesn't look great. There are concerns growing over what's going to happen with the Chinese economy. But at the same token, yes, there's concern over potential supply disruptions as a result of these geopolitical issues. And of course, Syria as well, rumbling in the background, wider risks in the region, as well as the Iran situation. So it's really a balance of those supply concerns and also worries over how quick the economy is going to grow. But when you look at the overall balance, the market's reasonably well supplied. So
Simon, you mentioned China. How big a factor for oil prices going forward is this going to be?
Oh, it's key because most of the demand growth we've seen over the last decade has come from China. So like 40% of the increase in global oil demand has come from China alone, as well as other emerging economies. So China is absolutely key to this. And if China starts to slow down and there's talk of a hard landing, then I think going forward, we see oil prices moderating quite a bit, as well as other commodities.
So let's finish up with prices. Where are we going to be trading for Brent at the end of the year?
Well, we still think prices should ease off a little bit on the basis of those slightly gloomier economic outlook. But rumbling around is the Iran situation. How that plays out is going to be crucial. We've already had the QE3 announcement, so I think we've got the benefit that we're going to get from monetary policy there. So I think probably the look is down now, depending on whether we see something happening in the Middle East.
Okay, Simon, many thanks for talking with us. Simon Wardell, IHS Global Insight. That's it for now. There is more on Reuters.com and, of course, the Insider platform. Join us each weekday for Market Pulse, a snapshot of what's moving on financial markets and why. I'm Axel Throvel. This is Reuters.